Welcome back. Microsoft CEO Satya Nadella, the second major technology CEO to visit China in recent weeks, following Apple's Tim Cook. Nadella heads to China to meet with government officials as the country's antitrust probe of the company nears its third year. Our next guest, no stranger to China. He's betting big on the country's distressed debt. Want to bring in Wilbur Ross, W.L. Ross and Company Chairman, Chief Strategy Officer. Wilbur, good to see you. Thank you so much for joining us.
Thank you for having me on.
What's your take on Microsoft CEO going to China right now?
Well, I think he's probably trying to negotiate a solution to the antitrust problems that he's got over there. And I think he's right to do it. That's a huge market, and it's an important market for him to protect.
It's an important market for America, right? So do you have a feeling in terms of trade and immigration, as these are the two big issues that are important to Americans? It's also Donald Trump's platform.
Right. Well, it is indeed, at least a part of his platform. Yeah. Well, the fact is that China has such overcapacity that it is dumping. We were talking just before the show came on. They have 1 billion tons of steel, 1 billion tons of steel capacity. That's half the total in the world. They consume 700 million tons domestically. They've been exporting mostly at very cheap prices 100 million tons of steel. That's enormous. And as a result, it's cost the EU 40,000 jobs in the last few years. That's why you're getting all these countervailing tariffs come in. They have to deal with the overcapacity problem.
So it sounds like you agree that, yeah, we want to get into that market. We want free trade. We want to do trade, but we want it to be fair trade.
Well, the rules of trade are that you shouldn't be dumping things in other countries. It's fine to export, but it shouldn't be at prices below cost.
Yeah, and that's one of the stories in the Journal today, you guys. Top story: tariffs on steel imports boosting prices and aiding U.S. steelmakers, but raising manufacturers' costs.
So, Wilbur, I've heard from the CEO of Nucor Steel saying that, you just can't compete with the way China does business. They have too many tariffs to bring U.S. steel into China. But can you give us the bigger picture, not just on the steel industry, but on how that unfair trade between China and the U.S., kind of back to Donald Trump's talk about making it fair again? It seems like it's an unlevel playing ground for us to do business in China.
Well, I think the bigger problem for the moment is that they have such overcapacity, and China is really about jobs. It's not really about profit. Take cement, for example. China produced more cement between 2012 and 2014 than the U.S. did in the whole 20th century. Think about the proportionality of that. So it isn't just steel, it's everything. And the dilemma the Chinese government has, those are all activities that employed lots and lots of people. If they shut down, now what do you do with all those people? You have the danger of social unrest. So they have a very complicated problem. I think the only solution for it is the Chinese government's going to have to figure out some way to solve the economic needs of those people. Because those excess facilities also tend to be very inefficient and very pollutive. So they do a lot of other things that are problematic besides overproduction that results in dumping.
Mr. Ross, can I quickly ask you about your financial support for Donald Trump? You and I were both Jeb Bush backers in the primary. Did it end well for us. But can you tell me how you made the decision to financially support Mr. Trump?
Well, first of all, he's going to be the nominee. And the fact is they're not going to declare the position vacant. There are only going to be 2 contenders for it. I think he is a clearly better choice than Hillary Clinton.
How much can you raise total, do you think? Not you, but how much do you think he can raise?
Well, he's going to raise a ton. You see where Sheldon Adelson is going to weigh in. The first big event was about a week ago in L.A. They raised $6 million at one dinner, one night. I don't think he'll have such trouble raising the money.
Yeah, I mean, Adelson considering a super PAC to support Trump's campaign, backing that would obviously boost his firepower. How much money does he need?
Well, that's the unknown question because he gets so much earned media. You just look in the primaries, he spent, what, under $50 million, and I think a lot of that was probably for jet fuel to get him from one place to another.
Yeah.
So he doesn't need the same kind of monies that other candidates have needed historically.
Yeah.
So
before you go, Wilbur, what do you think about these markets? We've been up now for 4 months. Oil where it is, stocks up. Would you sell into this?
I think there are a lot of things to worry about. To me, the biggest worry coming up near term is the Brexit, the potential for the UK pulling out. That would really be a madhouse if it happened. And what's strange about it, in Scotland, it was the young people who wanted to break away from UK. Young people, idealist and patriotic and all that. In UK, it's the reverse. It's the old people who want to pull out, and the young people know there'll be 500,000 or so unemployed people if they break out.
Why would it be a disruption to markets, you think? I mean, is it the financial services sector with their interest and exposure to the UK or something else?
Well, I think it's a complication. First of all, there'd be a domino effect. For sure, the Scottish exit would come back up again. You know the Spaniards will have the problem with Catalonia.
in Germany, maybe?
Germany, well, you're having all these extreme parties, Eurosceptic parties, get together. And if you had a big country like UK pull out, remember, the EU was hysterical over the danger of Greece pulling out. Well, Greece is a pimple compared to the UK. So to the degree the fears were at all justified for Greece, got to be 10 times as dangerous with the UK.
Wow.
And for the old people, it's especially silly. More than 70% of the people over 45 years of age in UK own their own home. If you have 500,000 people laid off in the recession that would follow a British exit, those house prices will collapse. And a house is usually the main asset that any family has.
Yeah.
So it would be financial suicide for the old people to have it pull out.
Wow. Really interesting stuff. Thanks for your analysis on that, Wilbur. Great to see you.
Good to see you.
Thank you so much. Wilbur Ross, W.L. Ross and Company Chairman, Chief Strategy Officer.